Today's show is brought to you by Kentucky Private Lending. We'll talk about the cool things they got going on later. Want to scale your real estate game fast? Eric Payne from Kentucky Private Lending breaks down how hard money can fuel your life-changing deals in today's market. I'm Milton Ali.
And I'm Hampton Scurlock.
And we want to welcome you to the Investor Tribe Podcast.
Late night grind, got the cash in the flow. Flipping these dreams, what's the portfolio grow? Brick by brick, stacking wealth in the zone. Investor Tribe, OBS, where the hustle is home.
Eric Payne's here. He's helping investors access the funding they need to close quickly and confidently. Eric Payne, welcome back.
We always love it when people who have money come on the podcast.
Yes, even if they don't have money, we like them, but we really like them when they have money and they lend that money out to other investors.
We like them more when they have money. Did you bring money? That's the whole thing. Like, if he brought money, think about what we can do.
Yeah, I think we got a Brinks truck out in the. Oh, look at this.
Yeah. I mean,
make it rain.
No, do not do that. So he brought money, so that we love that. We love that. And so basically what we've seen is that over the time, whenever we're in need of capital to do a project, we have to go to a lender. And so with my clients, what I've done was I would sit down with my clients and break down the process and talk to them about what was needed, how this works, and how to go about, funding your deal. First finding your deal and then funding your deal, right? Well, that's where Eric came along, and Eric was like, hey, I'll sit down with your clients and kind of do some of the same things, and I'll help them out. So that's where the relationship was born. It was like, oh, okay, great. You're willing to sit down with my clients and help them. And that allows me to focus on finding the deal while he can focus on funding the deal. And so we're going to have that conversation and find out how hard money fits into the overall investor landscape.
And we're saying hard money, it's Kentucky Private Lending or KentuckyPL.com. But hard money can be easy. And sometimes you need money quickly in this business, whether it's an auction or a property you got to pay cash or do a quick close. Sometimes you need to get the deal done, so you need the easy way to get the money quickly. So Kentucky Private Lending can help you with that. And they make all kinds of deals in Kentucky and Indiana.
And
Ohio. And you say you're looking at other areas possibly down the road?
More coming soon. Next time I'll be on the podcast, we'll probably have a couple other states that will be lending in.
And this is your second time on the pod, so we want to welcome you back. It's been so long. To think that we've been doing this for over a year now is just amazing. And you were on the pod a year ago, which is just crazy to even think about.
Absolutely crazy, and I gotta say it's come a long way. Like I'm impressed with the whole operation, and we're always real with each other, right? When you first invited me on, my initial reaction was like, man, I feel like I'm seeing podcasts pop up all over. Everybody's got a podcast,
right.
But to see what you all have done with it, like the guests you all have had on, the quality of it, the realness of the conversations, and the information that you guys are getting out to people. I mean, kudos to you guys. You all done a fantastic job. Now coming back the second time, I'm more like, do I deserve to be sitting at this table with these guys? I'm humbled and excited to be here. But
thank you. And you know what? You guys have grown too. So when we first got together, was doing business together a few years back, it was kind of like you, and then there was you, then there was you,
right.
And you had a third arm. You kind of had a whole bunch of stuff going on. Now you guys have like a staff, and it's a tremendous staff, and so it's pretty fun over there as well.
Yeah, it's been really exciting. You're right. You and I met early on when we started the business 4 years ago, and my role within our partnership, us owners, getting the company going, it was like, hey, you go out and get the thing off the ground, build out our processes. But a lot of the processes were me. You may remember
right.
Some of your early clients. It was like, hey, I need a draw request. I'll go drive to the property and meet you there, check out the work, and cut you a check. Some pretty antiquated stuff at the beginning. But It's been awesome. I've really, this was my first venture into, starting a company from the ground up. And so while it's been stressful at times and a lot of, lessons learned along the way, when I look back, I'm thankful that we did it that way, because now as we've grown and we're lending in multiple states and we have, a team of 5 employees and, software that we're investing in and things like that, it really helps me as a leader within the company to know that, like, hey, I've really had my fingerprints on every part of our processes and every part of our business. So when I'm talking to the likes of Judy and Krista, our phenomenal loan processing team, it's not from a place of, hey, I need you to do this. It's like, hey, I've done it before, and let me show you how to. And then we've been really lucky, and I think done a great job of bringing in the right people. Jake, our newest member of the team as our controller, when we're bringing people on, it's from an angle of, here's what we've built and how we're doing things, but you have a wealth of experience yourself that you're bringing to the table. So we want you to come in and put your fingerprints on our process. And they've done a great job of taking whatever system made sense to me when I was doing it all, and tweaking it and improving it and making it more efficient, and setting us up to be able to continue to scale. So yeah, it's come a long way on our side, just as you all have, since our first lunch at PF Chang's, where we never got to eat.
Right.
They didn't bring us our food. So.
Right. That's crazy. It's so, yeah, that was a crazy time. And so the thing that I wanted to kind of talk about was, we've done a lot of deals, and I've done a lot of deals. Hampton's done a lot of deals. Talk about the speed and convenience that kind of and the flexibility that kind of differentiates you from working with maybe traditional lenders.
Sure. Yeah, that's a huge part of the equation. And, probably if you asked our investor clients, probably a main reason that they like to work with hard money lenders or private lenders. The biggest aspect there is that, because we're, a private company, independent company, we're not needing to adhere to the same guidelines when it comes to underwriting, which in essence makes it a more efficient process, right? Like, you think about, borrowing money from a traditional lender. Myself, I was a banker prior to starting Kentucky Private Lending, and even the best banks with their processes they've built and just really large institutions that do a fantastic job. Inherently, there's just more hoops to jump through, maybe be a way to put it.
Right.
And so even the very best, they don't have the same flexibility that a company like ours does. The flip side of that, we're obviously taking on more risk, which is, kind of the trade-off, right? But with us, the speed, I tell all of our clients, just a general guideline, if we've got 10 business days, that's plenty of time for us to get a deal done, from submitting the deal online to closing and funding that deal. The way we're able to do that is, from an underwriting perspective, we're really asset-based lenders, meaning that we're underwriting the property more so than the borrower. We're underwriting the borrower just in a more subjective way. We want to get to know you, understand your background, what level of experience you may or may not have with real estate investing. We'll still, run soft credit pools, things like that. So we're not just handing out money.
Right.
But it's a little more subjective on that side, because at the root of it, what we're getting at is, what is this property that we're funding on? Where is it located? What condition is it in? Let's really look at your rehab budget and scope of work, what you're going to be doing to the property, and ultimately through an appraisal, seeing what that property should be worth once you've completed it, and getting into what is your exit strategy. Is this a buy and hold? Well, let's look into your refinance that you're going to be getting into. Or if it's a fix and flip, relying on folks like yourself who have a really good market knowledge to know, what the likelihood of selling the property for what it appraised for, how we feel about that exit. So we can do that in a very short amount of time. So, for our investors, they love it because they can submit a deal and, within 24 hours, know whether we like the deal or not, and have, preliminary terms in their hand to know what the cost is going to be, and all of those things. And then from there, as long as we don't have just a really ugly title that's going to take a lot of work to clear up, we can typically get an appraisal in a few days. Whatever day the appraiser gets out to the property, typically that following day, we have the appraisal report back to us.
And that's wicked fast.
So so it just it just gives investors the confidence to know that, like, hey, I can be competitive when I'm going to make an offer on a property, because while it's not cash, it's probably the next best thing because of the timeliness of it. And just making it easy, like Hampton mentioned, hard money can be easy. Actually, when we met prior to Flip Savvy and all the good stuff that we've done together educationally, we were doing a little class called Hard Money, or Private Lending 101, Hard Money Made Easy.
Yeah.
And that's kind of been at the forefront of us, building this company, is like, we know that for these investors, deals can be competitive, and being able to, efficiently get the funding that you need, as long as the deal makes sense and everything looks good. We keep that top of mind and try to move very quickly. So it's a big part of the equation, a big reason why people do business with us, and always a focal point of what we're thinking about when we're building out processes and building out our team, to make sure that we can have those type of turn times that investors need.
Looking for funding that works as hard as you do? Kentucky Private Lending provides fast, flexible financing solutions tailored for real estate investors and small business owners across the Bluegrass State and beyond. Get the capital you need without the red tape. Visit KentuckyPL.com today and start building your future.
And we've talked a little bit about getting money quickly, and that speed many times is the name of the game, or to secure deals, to get them closed. In real estate, I know I'm thinking of auctions in particular, some commissioner sale auctions, or just online or in person auctions. A lot of times you've got to put down money the day of the auction and be prepared to close within 10 days. Sometimes it's 30, but sometimes it's 10 days.
Yep.
So you talked about that 10-day time frame, and you said investors can go to KentuckyPL.com to kind of submit their deal. I hate to call it pre-approved, but
Yep.
just do a little submit the information to you. And you guys work with seasoned investors. I've heard you've worked with newer investors that have a good deal, or newer investors that partner with someone that's seasoned to kind of hold their hand and help them be accountable and make sure the deal is profitable.
Yep.
But have you seen any examples recently where you guys have stepped in and helped save a deal,
Sure.
and because someone didn't have the money to get it done with cash, or they were trying to go through bank financing and it took so long, or they're waiting and need more documents, and then you guys stepped in and got it done quick?
Yeah, that happens a lot, because I think and to kind of give some context before I get into it, there's multiple ways to fund a deal, right? We all know that. We're one of those many ways, and so these stories aren't intended to shed any negative light on traditional funding options, or things like that. But we do, I think, just inherently, if someone is typically using traditional financing and there's an issue there, then we're like that next call, right? Because they're like, well, hey, maybe these guys can get something done. A recent example, we got approached by a realtor that we had funded some deals for his clients in the past. He kind of got to see how we operate and enjoyed doing business with us. So he reached out to me and was kind of like, hey, I don't know if there's anything that can be done, but I've got this guy. He's been under contract for like 8 weeks already. He's working with a traditional lender. I forget if it was a mortgage broker, or, some type of more traditional funding. And he's like, they're just running us through the ringer. Like, we've been through this process for 8 weeks already. Now all of a sudden they're telling us we need to get a second appraisal on the property, even though the property as is appraised for about the total project cost, what he's buying it for and what he needs to rehab it, not even looking at the after repair value. And he just kind of said, hey, I don't know if there's anything you can do, but if there is, it's a 6-unit property. It's in old Louisville. I'm trying to help my guy out because we've extended twice now. I don't know that we can extend a third time. I don't want him to lose this opportunity. So we stepped in, and that was a scenario where we already had an appraisal that we could use to give our appraiser and let him kind of bless it that like, hey, this is a good appraiser.
Okay, good.
Which helped, as a good appraisal. So that helped, make sure that we felt secure about the appraised value, but also speed up the timeline because they're in kind of a panic crunch. I met with the investor, the realtor's client. He was really, really strong, works as an actuary, as his day job. So, actually strong financially, also had some experience in real estate investing as well. And the property was actually next door to his primary. So like the whole motive behind it was like, hey, it's a good investment, but also I want to make sure there's a nice 6-unit asset right next to where I live. So in that instance, we were able to come in and not only approve the deal for him and get it done. I think we got that one done within like 7 days because we had
so 8
no
weeks
choice.
or less than 8 days.
Yeah.
So if you get your choice, that's. I was going to ask how quick, but that's great. You got it done.
Yeah, it was
7,
like 8. I think we got everything we needed, his scope and all of that on like the 13th, and then we were closing by like the 20th or something like that. So we were able to, come in and help them get the funding they needed. On top of that, because he was going the more traditional route, another difference and kind of advantage working with a lender like us or other private or hard money lenders. Usually there's not as big of a down payment requirement. So, when he brought the deal to me, he's like, hey, I was already planning on putting 20% down on purchase. Well, you guys know, like we very rarely ask for 20% down on any deal. So not only could we get it done for him, get it done in a very efficient manner, but also he had to bring less money to closing than what he was, planning to with the other financing. So it's a good example of where we can really bring value to investors and get stuff done for them that maybe they're running into trouble with other options.
Yeah, that is a great story. So that is that happy ending, and so not only able to help save that deal. I mean, now he's probably making some money, some rent off that property, and he's he's probably beautifying the neighborhood. He also control over who is living next to him and his family.
Yeah.
And see, that agent got a commission. See, that's what
Everybody
I love
eats.
so much about that.
Yeah.
Because you were able to close really quickly. That the seller, the buyer, everyone was taken care of. Agent got paid. See,
Seller got their price. They got it sold.
Everybody got it sold. Everybody is happy, and you bring that type of happiness to the deals, right? Mm-hmm. And so that we love that. We absolutely love that. And so it's, when do you think? I mean, we know the answer, but we want you to help our viewers understand, when should we use you, mm-hmm. and when would it be a little bit more appropriate to use traditional financing?
Yeah. I mean, when to use us? We kind of have 3 main scenarios that we see. You've got your flippers, right? Somebody that's going to flip a property. So number one, they're going to bring a deal to us. It may be a distressed property. It may just be an outdated, more cosmetically outdated property, but you're going to buy it for X, you're going to rehab it for Y, you're going to sell it for Z. We're great for those because of the efficiency and ability to get you the funding for the purchase of the property and to rehab it so that you can sell it and make your profit. Same structure, different exit would be your BRRRR investors, your buy and hold folks that are going to buy a property, rehab it, and then they're going to take it out for refinance to keep it as a long-term rental or an Airbnb or whatever their play may be on that property. It's the same operation for us as far as funding, purchase, and rehab, so we're great for those as well. The third is, not as frequent, but, I hesitate to use the term bridge loan because in my banking days that meant something different, but a bridge loan in the sense of like you just need me for a very short window to come in and fund a deal. An example of that, sometimes we'll see clients that say, hey, I've got financing lined up. I'm not really doing much to this property, and I'm going to hang on to it. But my traditional lender can't close for 30 days, 45 days, 60 days, whatever. I got to close next week or else this might go away. And we can come in and just fund the purchase of that property, knowing that we're holding it for a very short amount of time until you pay us off with the long-term lenders. So really any flavor of all investment property. We don't do any primary residence, so all investment property, primarily residential 1 to 4 unit. We don't exclusively do that. As I mentioned in my story, we just did a 6 unit for that.
I was just going to ask about that because I noticed that for a while you were only doing 1 to 4 units,
Yep.
but you are willing to go a little higher.
Yeah.
For case, it's on a case by case basis.
Correct.
I imagine. Yeah.
Yeah, and like a 6 unit, that's not something that's drastically outside of our quote unquote guideline of 1 to 4 unit. Really, what we stay out of, and not for lack of experience. Actually, myself and one of my partners in our banking days were doing commercial real estate financing and things of the like. But we just really don't get into like the large multifamily or commercial real estate properties, industrial stuff like that. We've really just found that we keep it simple. The vast majority of the deals we do are single family homes or small multifamily, and we've kind of just stuck to what we do. But yeah, we will go slightly outside of it as long as it's not something way off base from what we typically do.
Managing real estate can be complicated. Get one thing off your plate and contact our friends at Liberty Mutual or call 1-800-266-0644 and mention Milton Ali. You can also use my code KY-444689 for your free quote today.
And if some investors, they are hesitant to use hard money or they're scared of it. Mm-hmm. And I had an investor say, I was going to go through a bank and it was taking too long and I lost the deal because I didn't want to go. I didn't want to pay that extra money or pay the extra interest rate, or I don't want to pay hard money rates.
And they lost the deal.
They lost about $75,000 to $85,000 in profit. Mm. And I didn't smack them in the head, but verbally I did. I was like, I told them to take their hand, smack themselves in the forehead, and listen to this. I said, what interest rate would you have paid to get that deal done? How long would you have paid interest to make $85,000?
Right.
He goes, figured up all about 7 years. Mm-hmm. I go, so you could have borrowed the money, you could have paid a couple months of interest, and had maybe a couple $1,000, that $85,000 go away to interest. But you were too stubborn, or didn't have the eyes open, or know that didn't run the math, and they didn't consult anybody.
They're tripping over a dollar to pick up a dime.
Yeah, and they got scared, overwhelmed, and a confused mind usually doesn't take any action, or a confused mind says no because they just heard stories, or they got scared away by a double-digit interest rate versus a single-digit interest rate for private money. And then after that conversation I had with them, they said, Hampton, you're right. That was the dumbest thing. I should have called people. I should have talked to other people. And I agree with this. Like, that was pretty silly. But now they know. Now they know to call you because they can get pre-approved. They go to KentuckyPL.com and submit the details. And they could have done that deal and paid you a little bit of interest. They would have made a lot of money and they would have been happier.
Yeah. Yeah, we see that a lot. People do get hung up on it. I mean, admittedly, when I first was meeting with my business partners and just having conversations about starting Kentucky private lending, not having the exposure to hard money coming from the banking world, that was something to me. I was like, do people pay that? Like, is that a thing? But, as I got more exposed to, the real estate investing world and realized that, I think you just have to overcome that hurdle because you're right. If you're dealing with, like, our average loan amount's about $150,000. So you're dealing in those loan amounts, you're kind of splitting hairs, even if you're, nickel and diming over a point here, a point there on origination or interest, because in the grand scheme of things, it's not much. Also, as you guys know, as savvy real estate investors, this is short-term lending, right? Like we're talking like 6-month loans. So, with that, even if you're projecting out a full 6 months of interest at whatever rate that it may be, the overall economics of your deal, assuming it's a good deal, like that's nothing, right? Like you're going to make,
Right.
I think that's a perfect example of, how you can get hung up on, is it 7% or is it 12% or whatever it is, but ultimately what's more important? Am I going to make $75,000, $80,000 or am I going to make $0 because I lose the deal? But yeah, we definitely see that. And the approach I take with it, kind of back to your other question about, when shouldn't you use us? We're always very upfront with people as well. Like, our goal with our clients is not just to fund the deal at hand, but also provide whatever guidance we can outside of that specific deal. So, a lot of times, like one example that comes to mind, a lot of people approach us with like new construction projects, and especially if it's a new construction project that they're going to hang on to in some form or fashion. That's where we'll kind of lean on our experience in the banking world and the connections that we still have to say, well, hey, would this be better suited for like a more traditional construction to perm financing? Obviously we love to do deals. That's what we do. But if we can set you up with another lender that's going to economically be better for you in the long run, I'd rather do that than just say, yeah, I'll do your deal, knowing that it's not best for you.
Because it reminds me of a call I made to you about wanting to go build a house.
Yeah.
We were trying to build like a small development in an area. And I said, hey, man, you do this. You were like, well, I'm not really all that sure.
Yeah.
You got to have your stuff together. You better have it really together. And so we end up, moving on from there. But I definitely appreciate you providing us with an outlook on what hard money is and best use cases for it. And if somebody wants to get in contact with you guys, how would we do that?
Yeah, so as mentioned a few times, you can go to our website, KentuckyPL.com. It's got, customer inquiry forms you can fill out there. Honestly, the best way is just to reach out to me directly. My cell phone number is 502-727-1019. That's a big part of my day-to-day is fielding calls and texts from all of our clients and potential clients. So, reach out to me. I'm a big fan. If you're local, I love face-to-face, in person, get to know who we're going to work with. That's not always available, so we can, minimum hop on a call. But reach out to me. That's my cell phone number. My email address is Payne, Payne, at KentuckyPL.com. Shoot me an email, call me, text me anytime. I love connecting with people and hearing about what they're doing and sharing where we can bring some value with our funding or any other resources that we might have.
And so our producer said getting hard money shouldn't have to be a pain. So
Payne.
Yes. Oh my gosh.
Make it easy. Call Eric Payne.
Yeah. See, there you go. Now, as far as what states are you operating in right now, that so our members could know where they can go? I believe it is Indiana and Ohio and Kentucky. They can do deals. So our Ohio members, our Indiana members, and as well as our Kentucky if you're here locally.
And maybe new states be added if you do a rollout, because this podcast may live on for a while. So check the website, reach out to you if they got a question, but probably the surrounding state, Kentucky and surrounding states.
We got people all over. And we got people all over where you helped one of my Florida clients purchase. And
so we're currently active in Kentucky, Indiana, and Ohio. We can lend all over all three of those states currently. Just to give you a heads up, don't hold me to it, but some of the areas that we're looking into, I think Missouri will be on the table soon, potentially even Michigan as well. So, we're kind of exploring different markets and, testing the waters. And so it'll continue to grow, and we'll, of course, keep everybody updated on what areas we're in. But if you got a deal today, Kentucky, Indiana, and Ohio is where we're at.
And I bet Milton's glad to hear Michigan.
I know.
If you've talked to Milton for more than 37 seconds, he's from Detroit.
Yep.
He's worked it into.
Right.
I'm from Detroit. That's how we roll. Milton's from Detroit. In case you haven't heard it multiple times.
Facts. Yeah. That's
what
we do, man. I represent. So we want to thank you for joining us on the pod today. And this won't be your last time because he's a sponsor. And so we're just so grateful that you can hang out with us. And you can reach us on invtribe.com. If you want to know more about your deal, you can go to kentuckypl.com and they'll actually be on our site. So we'll have an opportunity for you to join the communities where you'll be able to talk to other investors and you'll be able to search for deals. You'll find deals, you'll find forms, you'll find resources, and you'll find some money. So by going with Kentucky Private Lending, and it's so cool that we can just do that. So join today at invtribe.com. I'm Milton Ali.
And I'm Hampton Scurlock.
And we'll catch you on the flip side of the Investor Tribe.
The Investor Tribe podcast is brought to you by the Investor Tribe, all rights reserved, featuring Hampton Scurlock and Milton Aldi, executive producer Drew Cookenmaster, produced and distributed by Bespoke Marketing.